Destination Africa, brought to you by Standard Bank.
When the world's biggest retail company, Wal-Mart, initially announced a plan to buy South Africa's Massmart in September last year for a staggering $4.2 billion, many were surprised. This, where foreign direct investment flows to the continent during most of the past decade, has been concentrated in extractive sectors. A report by the UN Conference on Trade and Development, however, has recently revealed that, much like Wal-Mart, a growing number of major investors are now betting on the continent's ultimate wealth: Africans themselves. Having said that, the Wal-Mart Massmart tie-up and eventual acquisition of a 51% stake for $2.4 billion hasn't come without its share of hurdles. We've had both government and unions moving to impose stricter conditions on its business here, and that's put quite a few question marks around what this spells for investor sentiment and for FDI into South Africa and Africa as a whole. I recently posed the question to Philip Jennings, General Secretary of UNI Global Union, to get his sense on whether the regulatory environment has dented foreign investor sentiment. Here's what he had to say.
South Africa is a global leader. South Africa is an African leader. The business community around the world has the highest regard for the business community here in this country. I think some of these observations are somewhat hysterical. I don't think they should be taken too seriously. They're observations made by analysts who are interested in spot market decisions. South Africa is open for business. Global business is present here already across the board, from raw materials to manufacturing into the services economy. We will see more international investment in the services economy, but we need to have the certainty of the conditions upon which this takes place. When Wal-Mart comes to town, it's a game changer. It's 2 million people employed in Wal-Mart. They are the world leader by far. The income of Wal-Mart is higher than the gross national wealth of South Africa. This is not a normal kind of transaction. South Africa is open for business. It's not responsible reporting to say otherwise. What we're saying is it's a global economy. There need to be clearer global rules. There are public interest concerns. They have to be taken into account.
Well, joining me now in studio to take the discussion further, looking at both the investment opportunities and challenges the continent's retail sector presents, is Syd Vianello, Retail Analyst at Nedbank Capital, Derek Engelbrecht, Retail and Consumer Products Sector Leader at Ernst & Young, and Pickard, Director and Founder of Retail Africa. Welcome to you all, and thanks so much for joining me at the desk today. Syd, let's perhaps start off with you. There we have it. One opinion that's out there, that Africa is open for business, and that despite the recent rumblings we've heard around the Wal-Mart Massmart transaction in particular, where foreign investors have a keen eye on the African consumer. At the top, run us through what they're buying into here.
Well, they're buying into Massmart, and what you've got to consider is Massmart, for the purposes of this discussion, Massmart is really two businesses. They have various divisions, but there are two businesses. There's a domestic business. Now, I remember saying on one of previous CNBC Africa shows, it only represents, well, it does represent 93% of Massmart's total revenues, and I think a smaller percentage of profits, and 7% Africa. The argument that was put forward was that Wal-Mart was buying into Massmart in order to get into Africa. And I remember at a conference in February, there was a debate, excuse me, and some people disagreed with me when I said that ultimately they're actually buying, you're starting off by buying the 93%. And the 7% comes later. And there was a huge debate about that. Some people obviously disagreed with me. And when Grant Patterson spoke at made a speech at the end of this long debate, he basically agreed with me that at the end of the day, for the kind of price you're paying, you're first of all buying the 93% because there are opportunities to grow the domestic business, particularly in the food category, where they obviously plan. I don't think they'll be happy with a 2-3% market share they have now. Put a 1 behind that and maybe put a 2 behind that, and that I think would kind of, looking at Wal-Mart globally, those are the kind of market shares they would be more interested in, but not 2 or 3%. And ultimately, when you've got that right, you want to take the other 7% and you want to make it a much bigger business. But I think there are, and we'll talk about that later, I'm pretty sure, there are massive challenges in Africa, it's not 7% in one country.
Yeah.
It's 7% in 31 countries.
Absolutely.
And it comes with a very, very large number of challenges and issues.
Derek, what they're buying to effectively in terms of the African appeal is, these sizable populations that are boasting a rising emerging middle class and strengthening purchasing power as well. Amidst the recent, slump we've seen in FDI flows into Africa, according to an UNCTAD report, which I cited earlier, the services sector stands as the dominant FDI recipient at this stage. To what extent do we need to start reassessing FDI in Africa and where exactly that's being pumped?
I think you're absolutely right. Historically, the largest portion of FDI favoured the manufacturing and before that the extractive industries. But there's no doubt that as investors are looking towards Africa, the services sector is following close behind. And broadly, services, I guess, is the banking, the unbanked, providing telecommunications to people that need to communicate regionally. And very clearly the consumer products angle, which is just looking after these big populations in some of the large urban centres and seeing a very real market. So there's definitely a strengthening of the services industry taking a far larger share of FDI over the next 5 years.
Hannes, let's get your view. To what extent, we heard from Philip Jennings what he thinks of this entire Wal-Mart, Massmart, rumbling has done to investor sentiment. Has it dented possible appeal and threatened that evolution that we've seen emerge on the African continent?
We haven't seen that from a developer's point of view. We obviously follow the retailers when we develop shopping centres and go on not only consumer demand but on also from demand from the retailers. And so far we haven't seen that impacted.
So investor sentiment still strong at this stage. Let's take a look at how investors, Syd, are tapping into this potential here. Organic growth versus acquisitive growth. The more viable approach in your books when it comes to dealing with the continent?
Look, I think because of the lack of viable large retailers as a generalization throughout Africa, there are obviously exceptions, countries like Kenya, for example, but as a generalization, there is a lack of large established retailers. Maybe another exception could be Nigeria. I think as a result of that, the South African retailers would prefer to and have been expanding into Africa organically. If we look at the ShopRites, for instance, ShopRite has gone with its own brand. It hasn't bought anything. It simply established its own business because it had to build an infrastructure behind the establishment of the retail store. So why on earth do you want to buy something if you've got to establish the infrastructure behind it in any event? And of course, we get back to the question of, is there anything to buy? Well, in the countries where they've elected to set up shop, there isn't anything to buy. So they've had to go in organically.
Yeah. So, organic growth is tricky, Derek. We've seen the likes of ShopRite, of Spar expand on the continent that way, but it's taken time. It's been slow and steady progress that's been made. And some even say that, South African operations hold an African mindset, so to speak. So it's a feat that's not possibly very easy to replicate. What's your view?
I absolutely agree with you. I also agree with Syd that I think one of the key enablers of growing organically is being able to build your own infrastructure. Not literally your own roads or your own ports, but building a know-how about how those infrastructure can work for you and predominantly work against you if you try and do it the way that you used to do it. In many ways, in order to be successful, you almost need to have an extractive industry approach. A mine, typically speaking, generates its entire infrastructure that enables it to take the ore from below ground eventually to the point where it needs to put it on a ship and send it to the end user. Yeah. I think the complexity and the length of the supply chain, which is something our retailers have adapted to in South Africa, for example, an overwhelming trend building large distribution centers to optimize daily drops, is the kind of thing that possibly will only come to maturity in many years from now in a broader African context. Mm-hmm. So it's the length and the complexity of a supply chain which needs to be very well understood in order to grow organically.
Yeah. Of course, that one of the challenges that retailers face setting up shop on the continent, effective distribution networks and infrastructure that's supportive of that. Hannes, with site selection paramount, have latecomers, missed out? Some saying that the easy markets, the major cities, are already oversaturated, and opportunities lie now in penetrating the more remote areas.
In a South African context, I would agree with that. I think it definitely has lagged behind, and our focus is also starting to change a lot more from the urban environment to a more flatland environment.
Yeah.
In the rest of Africa, that's not the case. They haven't got the typical malls or shopping centres that we've got here in South Africa.
So very much still in the early stages of development.
Very much in the early stages, and I think that's why our focus have also started to change, and starting to look on a very small scale as to what the opportunities hold in the rest of Africa.
Sorry, I've got to intervene, but some retailers, I think, have missed the boat, not because of the urban versus non-urban Africa situation, because they elected to not to go into a particular country at a particular time. Mm-hmm. And a very good example is Massmart's situation vis-a-vis Angola. By their own admission, they effectively saying they missed the boat because they should have gone into Angola when Shoprite went there.
Yeah.
But for reasons, known to them, they elected not to do so. Now they're trying to get in there, and of course, what's your biggest pitfall, challenge that you're having getting into Africa? It's a retail site. Mm-hmm. And what happens? Number one, they try to get to Angola. The cost of retail sites has gone through the roof. The moment they get to a point, this is the kind of story they've told us before, in some of their presentations, we get to a position where we found a site and we start negotiating. Well, of course, the moment they discover who it is, the price doubles. And then of course it becomes potentially unprofitable again. So the net result is they're not in Angola. I know under Wal-Mart they're talking about going to Angola, but whether they're actually going to get there and when they're going to get there is another issue.
Hannes, let's just get your perspective on pricing structures moving in. Is it getting more and more expensive, exploring this uncharted territory?
It's getting more expensive, not only from pricing point of view on land, but the retailers are also not paying their due rental. Everything has gone up. Building costs have gone up. Transport costs have gone up, but rentals have lagged behind. And I know that a lot of retailers will shoot me for probably saying this, but it's time that they also start catching up. If they want that retail opportunity, they will have to come to the party.
They will have to come to the party. What about African governments themselves? Derek, are African governments doing enough to leverage off this appeal?
There's no doubt that South Africa would like the world to consider it being the gateway to Africa. But I also have very little reservation thinking that there are many other African governments that have exactly the same view of the world. Mm-hmm. In fact, I went through the Ghana Accra airport, and they advertise themselves as the gateway to Africa. So African governments are all in the race. The race is for FDI, the race is for positive investor sentiment. We are ahead. But we should not look too much in the mirror, because there are other countries that have the ability and the capability to catch up. So we should not let our current lead in that particular governance sphere not stand us in good stead, because the competition is rapidly closing in.